Hi, Thierry Roche here, host of Talk Radio's Inside Real Estate with your Homebuyer Insider Secret number 5. How to save hundreds on your homeowner's insurance, how to save hundreds to thousands on your real estate taxes, plus an added bonus, how to get Uncle Sam to pay part of your mortgage payment. First, a homeowner's hazard insurance is an annual requirement to everyone who has a home loan or mortgage. This protects your home in the event of a fire, tornado, earthquake, hurricane, any sudden catastrophe that might befall the property. Even against crimes such as burglary. Not only does it cover the house itself, but also its contents. Even if the home you're living in doesn't have a mortgage involved, it's still worthwhile in getting it. Since the insurance can be quite costly over the years of home ownership, learning ways to save on it and other strategies can actually have a tremendous effect on your finances. One of the top insurance agents in the East Coast revealed this information I'm about to tell you in one of my radio interviews. As an example, say you're buying a $400,000 home. Your lender will require that you have annual insurance for fire, storm, earthquake, damage, etc. By the time the procedure goes to settlement, you then tell your insurance agent that you want this insurance for the home that you're about to buy, and they will ask you how much the home is. The two of you go over some other minor details and features about the property until everything gets sealed. What most borrowers don't know is that there's an insider technique to restructure the insurance policy while still meeting the lender's requirements for insurance coverage and without raising deductible levels and reducing coverage. This technique can actually save you 35 to 40% on the homeowner's insurance costs every year. With an average policy of $1,000 to $1,500, this saves $350 to $500 every year. Now, it might not seem much, but the homeowner's insurance starts there, and then it gets increased every year because of escalating clauses, inflation adjustments, etc., as much as 5 to 8% a year built into the contract. So 10 years into the mortgage, you'll be looking at as much as $1,600 to $2,000 a year in insurance policy costs. Now, with the right information, one phone call is all you need to save thousands of dollars on home insurance costs. You can learn more about this strategy and how it works and some other money-saving techniques at my free live online webinar. Most people are unaware being able to modify their real estate taxes and do it without litigation is a big cost saver. Those who feel that their homes are overassessed can easily get their taxes decreased. The tax assessor's office in your county, jurisdiction, or city performs an annual real estate tax assessment, but in most cases they don't need and they don't really personally see your house. This means they might not be aware of improvements, features, benefits some homes may have. Their focus is on the basic square footage, the number of bedrooms, baths, garage size, lot size, etc., including some other details that, well, they'll be specific to that county. So if you find that your real estate taxes are higher than your neighbors who is living in a similar sized house, you might have a problem. In an interview with the chief budget director for the county that I live in, he revealed that the litigation is not a process that needs to be gone through. There's an administrative process, and there's a tax reassessment. Since there's a special procedure for getting lower annual real estate taxes, and the process is relatively simple given the size of the county and almost 1 million people living here, well, paying hundreds of millions of dollars in annual real estate tax to the tax assessor's office. He actually illustrated an example. He said if a home is assessed at $350,000 and the tax would be an example of $1 per thousand per year, that results in $3,500 a year that you'd have to pay. If you were assessed at only $300,000, then you would only need to pay $3,000 a year, saving you $500 a year, which definitely is quite sizable, adding up year after year. Now, this technique has 2 steps. The first step actually sees a 50% success rate for anyone who tries it, which makes the second step, of course, unnecessary. However, those who need to go to step 2 had an 80% success rate in getting lower real estate taxes without spending a cent. You can also find out more about this strategy and other strategies we're currently using, insider strategies that I've learned on my real estate radio show that saves home buyers tens of thousands on their home purchase and financing every day right here in Northern Virginia. You can check out my free live online webinar at homebuyerinsidersecrets.com. You can also get these insider techniques applied to your personal home purchase with our free Insider Access Home Buyer Savings Program and get a minimum guaranteed savings of $25,000 or more. Oh, and the best part is we guarantee you save at least $25,000 with my exclusive strategies. Plus, the service is no cost to you. Go to homebuyerinsidesecrets.com and find out why even other realtors and mortgage lenders actually use me as their own personal buyer broker in their own home buying transactions instead of relying on themselves. Now, One last bonus strategy I wanted to tell you about. First-time buyers love this. You can actually get Uncle Sam to pay part of your monthly mortgage payment. This strategy, the IRS actually offers to you in an indirect way, but most people, they're not aware of it. So first of all, most people know you get to write off the majority of your mortgage payment when you buy a home, whereas when you rent, you don't get to write off anything. I should say when you own a home, not just when you buy it. So when you own a home, you get to write off all the interest paid on the mortgage and all the real estate taxes every single year. Well, that's almost 90% of the entire payment. Some home buyers are aware, well, there's a lot of interest in a mortgage, but most aren't aware that it's almost 90% of the payment. So if you're paying $1,500 a month in interest and taxes, that's a write-off of $18,000 a year. That $18,000 a year of your annual income means you can't be taxed on that. And depending on your tax bracket, federal and state, let's just use something ridiculously low, which I know is lower than realistic. Well, let's say your tax bracket was only 20%. That still means $3,600 in taxes you don't have to pay. One caveat here, I'm not an accountant. Go see your tax preparer, go see a professional whose business it is to advise you on this. But the bottom line is you would be getting a tax refund after next year. After you go through an entire year making your mortgage payments, next year you would file your tax return and then wait, and the IRS would send you a refund because you overpaid your taxes since you own a home now. So why would you give the IRS your money for 18 months just to wait for them to give it back to you? You've been overpaying your taxes, pure and simple. Most folks don't understand that they don't have to do that. Once you're a homeowner, there are a couple of different legal and approved ways for you to tell the IRS that you want to pay fewer taxes every month. So in this case, instead of having the U.S. government applying the homeownership tax subsidy on an annual basis, they will actually do it for you monthly, which means in this example, you would get approximately $300 a month from the IRS directly in your paycheck. Now, for most first-time buyers, well, that would make the payments of owning less than the payments for renting. And if the IRS allows it, savvy real estate investors know this. Now you do too. Why not do it? Don't pay the IRS extra money when you don't have to. You can find out more, again, how we're currently using this strategy and others that I've learned on my real estate radio show to save home buyers tens of thousands of dollars on purchasing homes right here in Northern Virginia. Just check out my live online webinar at homebuyerinsidesecrets.com. That's homebuyerinsidesecrets.com. Again, you can get all these insider techniques applied to your personal home purchase free for you, done for you with our Insider Access Homebuyer Savings Program. And with that, you get a guaranteed minimum savings of $25,000 or more. And the best part, we guarantee it, and there's no cost to you for the service. Go to homebuyerinsidesecrets.com and find out why even other realtors and mortgage lenders are using me as their own personal buyer broker instead of relying on themselves.